Okay, guys, we are back. July 2022, our real estate market snapshot. We're going to jump right in. I've got a little bit of a companion video that we're going to do here, so this is a little bit different. I don't expect this entire audience to be interested. However, I just shot about a 55 long minute video. A little bit of a different target audience. It's designed more or less for real estate agents and professionals to watch. However, I'll share a link with you guys as well, so if you're interested in this sort of stuff, you might be interested in that. I've got this little fancy QR code up here. So a lot of the presentations that are in, not a lot, all of the presentations that are in this other presentation, you'll be able to find at this QR code. Market forecast from Chris Thornburg, Claremont McKenna College, California Association of Realtors, Matthew Gardner, a whole bunch of people maybe you've never heard of, but there's a lot of great content there, so take a look at that QR code if you're so inclined, and there'll be a link to the other video as well. So we are starting this month's market snapshot a little bit differently. We started doing these last August. If you laid them up every month for the last 8 months, they're very, very similar if you turn the audio off. We certainly didn't start with a quote. So we're starting with a quote today because times are changing, all right? So here we are. And by the way, this was not written out with proper grammar and pronunciations. This was basically written out the way it was said and spoken by the person who said it, and you're going to find out who that person is in a minute. So I'm going to read it to you. I would say if you're a home buyer or a young person looking to buy a home, you need a bit of a reset. Keyword reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. So this will be the process whereby ideally we do our work in a way that the housing market settles in a new place, okay? And housing availability and credit availability are at appropriate levels. So we're talking about resetting, we're talking about getting the market into a new place, and we're talking apparently about getting housing and interest rates at a different level. Who said this? Well, the chairman of the Federal Reserve, Jerome Powell. This was at the press conference on June 15th, immediately following that 75 basis point interest rate, 75 basis point hike to the Fed's fund rate, which ultimately gets tied to interest rates, which ultimately impact what mortgage rates are doing. So this QR code, again, it's new to this group. It's the same exact QR code that I had up on the beginning, and I'll be at the end as well. Goes to the same place. It's not a different QR code. There is a link to a YouTube video that has Chairman Powell's entire 2-hour-long press conference. I want you guys to watch the last 5 minutes of that press conference, especially if you have any interest at all in what's going on in the real estate market. If you're a complete junkie like I am, watch the entire 2 hours, okay? Having said that, I have it queued up for the last 5 minutes. The quote that we just showed you is in that last 5 minutes, along with a few other things that I think are interesting. And it truly is the last 5 minutes of his press conference, talking about interest rates, talking about housing, talking about a reset in our marketplace. Interesting choice of words. Not sure I like it. Not sure I know what to make of that. So let's jump into our inland Southern California market update, and maybe we'll sprinkle in a few of Chairman Powell's comments throughout the rest of this presentation. So what have we been doing? We're talking about interest rates. We'll talk a little bit more about those, which, by the way, interest rates are a little bit down from where they were last presentation. You may not be aware of that. I just said that their rates are going up. They did a 75 basis point hike. Lance, rates must be up this month. They're not. They're actually lower than they were a month ago. So we'll keep an eye on that. Eviction moratorium, I need to get rid of the slide. I think I've been saying this for the last 2 months. Eviction moratorium, for all intents and purposes, is dead. The tsunami of evictions is never materialized. We're good with that. Probably just get rid of that completely. So let's start with our median price, shall we? Here we are, Los Angeles County, median price, 2-year chart. Oh no, what's happened here? That is a pullback in value month over month from May to June, okay? So we saw a lower average, median sales price in Los Angeles County, all property types. Let's just reset this data for you guys for a little bit. I don't know, we've talked about this for several months. Every single piece of real estate in Los Angeles County is thrown into this. Little bitty condo, multi-million-dollar mansion, whatever, and everything in between, okay? So it's all of them there, and it's basically calculated on a median price. I've been using that for years. We can debate whether median is the best price to use or the best metrics to use, but that's what I use, and that's what I've been using. So we saw a pullback in property values in LA County. So for those of you looking for bubbles and looking for crash, there's your first indication that things are not, we're not in Kansas anymore. But relax, hold on a minute before we draw too many conclusions. This is the 2-year chart. So again, it's a little easier to see. We took the trend bar off, and you can kind of see that. Excuse me, this is the 12-month chart. The prior chart was the 2-year chart. So what does it all mean? Well, where we are is an $835,000 median price in LA County. 7.7 annualized return. That's June to June. Wait a minute, Lance, you've been talking about these 40% appreciation rates over the last 2 years. Well, I have been saying that over the last 2 years, but we're not in the last 2 years anymore. If you want to look at 2020 and 2021 combined, January to January, it's about 40% on average. Well, this doesn't look like 40%. Well, no, it's not, because this is June to June. We've started to see some leveling. We've started to see some correction, if you will, on the pricing. So the last 12 months, frankly, LA County is probably a little more reasonable if we just looked at the last 12 months of appreciation in the county. However, by the way, that number 12 months ago was 775, 2 years ago was 620, but we still have this big number, right? We have the 34%. That's a 2-year. That's June of 2020 to June of 2022, all right? So, but again, still a big number, but that 1-year number, things are getting a little more interesting for us on what these numbers look like, supply and demand numbers. This is the 2-year chart. I'm gonna skip it, go to the 1-year chart. So we started to see this inventory not get too excited here. It kind of pulled back a little bit in April and May, but we did see more inventory in June. The thing that's very troublesome is these last 4 months of pendings. Our pending sales, these are buyers and sellers coming together, have basically been dropping since March, April, May, June, okay? So is that an interest rate effect? I think it is. This is Chairman Powell. We need to slow down the economy. We're raising interest rates for the sole purpose of crushing demand, not only on real estate, but on other things. But in real estate, higher interest rates, it depresses demand. It's throwing the blanket on the economy, and buyers are saying, either I don't want to participate because rates are too high, or I can no longer afford the house that I wanted to buy, and I'm not willing to move to that neighborhood because that's the new neighborhood that I can qualify for. So we've got this little psychological thing going on, but even though we're now starting to see that inventory pick up, at least in LA County, we're seeing fewer sales. Something we need to keep in mind. What does that mean for us long term? Well, these are the numbers for those sales. So 15,000 plus homes for sale in LA County, almost 11.2% lower, fewer than a year ago, 14% from 2 years ago. This is the one that's really got my attention, Adam, okay? As we sit back here, we look at these 3,800 houses that are in escrow. That's 25% fewer houses than a year ago went into escrow. That's really, really got my attention, okay? So it's one thing to have a month off here and there, but when we're selling, not that the month of June of 2021 was ridiculous in a positive way. It was a good month, but well, hey, 25% fewer pending sales. And again, definition of that pending, a buyer and seller coming together, agreeing on a price and opening escrows. So that's very interesting to me, keeping a very close eye on these pending numbers. Is it completely interest rate driven? I think it is. I really think it is. This is Chairman Powell doing what he wanted to have happen. Let's crush that demand here a little bit. And almost 16% lower than 2 years ago. To me, that's not as important as the year-over-year number on LA County. Let's take a look at median price in Riverside County. Our second county now, what do we see? It's very minimal, but that's a $2,000 lower median price in Riverside County than the prior month. What does that actually mean? We were at $592 last month. We're now at $590. LA County was about a 7% year over year. Well, Riverside County is outperforming LA County by 11.3% year over year, but still not 20. And then That was last year's number. 420 is 2 years ago, but still 40% over the 2 years. That's June to June. So again, very, very big numbers. But you got to remember, when we're talking these year-over-year numbers, I do it in real time. I do it from month to month, as opposed to some of these economists will do last year or they'll do last quarter. And the stuff that you guys may be looking at now, somebody will come out and say this or that. They're always generally looking at least 30 days back, if not farther. The stuff that I'm giving you, today's July 5th. We're going to get this thing posted hopefully July 6th. This data is 48 hours old by the time you guys are seeing it. And if you're looking at any of my stuff that's more than a month old, just know when you look at it, just look at it strictly for archival purposes. You know, draw some conclusions, maybe go back and say, Lance said this, I want to see if he's right. But I got to tell you, if you want to know what's going on, don't look at something from 4 months ago. It's what drives me crazy when I look at some of these federal government numbers. They come out with a report on housing starts, for example. Well, that number is 2 months old by the time we get it. So what's supply and demand doing in Riverside County? Wow, look at this supply. This is exactly what I'm seeing happening in my offices. Listings are hitting the market. We're getting listings. We're excited. We see those those sellers coming into the market. But look at the same exact trend that we saw in LA County. We've got more houses on the market now, but we're selling fewer of them. So again, not panicking here, but I'm telling you, I'm very, very interested on what this trend is. And also, again, I believe it is interest rate driven. 100%, well, not about 100%, but significantly interest rate driven. So homes for sale, up 10% from a year ago. Let's back up. This is a year ago, homes for sale. This bar is bigger than that bar by 10%, okay? So this inventory problem that we've been screaming about for the last several months, at least for the month of June 2020, well, guess what? We're doing better than we did a year ago with inventory. It's not as, you're not going to hear me screaming about inventory like I have been for the last year, okay? Uh-oh, well, we're still 3% below from 2 years ago, but the pendings is what's got my attention again. 2,040 houses for sale. The LA County was 25% fewer than a year ago. Riverside County, 22%. So we've lost almost a quarter of our buyers and sellers coming together in both LA and Riverside County over the last 12 months. Interest rates, interest rates, interest rates. It really can be nothing else. Median price in San Bernardino. Remember how San Bernardino's kind of been our shining star? Oh, wait a minute. What's happened here? The exact same thing. So all three counties have basically seen a pullback in property values from the month of June compared to the prior month of May. So what are we looking at? 515. It's still 13% better than a year ago, which was 455, 360 2 years ago. Still a big number over a 2-year window, but again, it's that narrative that we're building here. People are not going to be paying maybe as much attention to this number when they see some of these other numbers that are dramatically different. By the way, I'd love nothing more than just, if I could have a wish for the next 4 or 5 years, is just give me this number somewhere between 0 and 4%. I'd be thrilled to death. Just a stable, boring real estate market with not a whole heck of a lot going on up or down. Not going to happen either way, though. What's our supply and demand in San Bernardino County? Again, interest rates, active listings are up. Let's get rid of the bars. They're up. The pendings, though, are down. They did actually have a good month. We talked about this last month, and this is the month of April. But this is the month of May. This is June. We pulled back in June. So again, more houses for sale. We needed it, but guess what? Fewer buyers impacting that market. So, which, by the way, let's put 2 and 2 together and come up with, well, doesn't that mean price reductions? Could. And actually, not only could it, it has in those 3 counties for 1 month, okay? So the real trend is going to be, what do we look at another month and another month and another month, and what's the narrative going to be building throughout the summer, and does it build on itself, and does it cascade on itself? I don't believe it will, but right now we're at 5.6% interest rates. Where are we going to be next month? I think that's going to answer the question. I mean, if we see more increases in interest rates and a narrative that's pushing buyers away, I think we potentially are going to have some challenges. So where are we with homes for sale in San Bernardino? 10% more than a year ago, 6% less than 2 years ago. And again, we've kind of got that trend. The 3 counties are almost identical in their buyers and sellers coming together trend. Another 22% down. Fewer buyers connecting with sellers last month than a year ago, and 31% from 2 years ago. So if it feels like things have changed and you're a real estate agent like myself, you feel this. Trust me, we feel this. Now, if you're a buyer out there, I got to tell you, this should actually be encouraging to you. Because if you're a buyer that's been in and out of the market trying to buy a house and haven't been able to get it done, there are fewer buyers that you're competing with today. You just have fewer people. So if you still have confidence in the market and you're okay with an interest rate at between 5.5 and 6, then go re-engage with your agent, go write some offers. The chances are you'll probably open escrow this month, okay? The question is do you have the confidence in the marketplace to do that? I would suggest you probably should, especially if you're not buying on speculation. Okay, I just randomly pulled the city of Temecula, and I swear to God, every time I pull these out, I give them no thought other than, is this a market that's in my marketplace, Inland Empire, Southern California? It is. Temecula is really, really interesting. Okay, so here's our 2-year chart for Temecula. Here's our 1-year chart for Temecula. You can see a little bit larger of a pullback in Temecula. So if you're a real estate agent or a buyer or a seller in Temecula, and you're really, really paying attention to this, you might feel a little more anxiety maybe than an agent or a buyer or seller in a little different marketplace, because this is a little more of a dramatic pullback in the city of Temecula as far as median price is concerned. We'll talk about that in a minute. 730, only 8.1% higher than a year ago. By the way, let's go back. This chart to this chart, that's an 8.1% difference from a year ago. In most marketplaces, we would be ecstatic to see an 8% appreciation in property values. But when you're coming off of these really, really accelerated price gains, it doesn't feel like you should be ecstatic, right? So that's 8% higher than 12 months ago at 675, 24 months ago at 515, 41%. So all of those folks that told those folks in Temecula 2 years ago, don't buy, we're going to be in a bubble, it's going to be in a crash, well, you just lost 41% hypothetically of hypothetical equity that you could have had. Which, by the way, this number here and these other numbers here, this is what's driving a lot of sellers right now. A lot of sellers feel like maybe they got a little more appreciation and equity than they might have deserved or otherwise ever expected. So hey, why not? Why not? Let's go ahead and sell. Let's go ahead and get out of here. Let's take some of that 40% appreciation and run and see whether or not we can do something. Oops, I'm going the wrong way with my Temecula presentation. So maybe we can take something with that and we can do something, and we still looking at this 41% appreciation and feeling pretty good, okay? Supply and demand Temecula. Are you ready? Are you sitting down? So here we are. The supply is up, which is nice. Listings are coming, but again, that drop down in pending sales. Fewer buyers coming together. This is the 12-month chart. What does it mean? Well, we have, different than the other charts, fewer homes for sale than a year ago. Fewer in the city of Temecula. That's not what we looked at in the other counties. So what are we comparing? I might have it wrong. I've got it wrong. Oh, no, I don't have it wrong. I thought I was wrong and I was right. So this is where we were a year ago. This bar's smaller, okay? That's smaller. That's different than what we see in the county. How much smaller is it? Well, it's 8% smaller, 8.1% smaller, and 16% smaller than 2 years ago. This is the one that's really got my attention, though. In Temecula, pending home sales, year over year, 40% lower. LA, Riverside, San Bernardino, 22%, 25%, 40% lower. Fewer buyers and sellers came together last month in the city of Temecula than did a year ago. That's a number that really has my attention a lot. Oh, and by the way, 40, just call it half. And half of the sales were done in this June as opposed to 2 years ago June. 2 years ago June, COVID June. It was a good June, but it was still COVID June. So we sold half the number of homes this past June than we did 2 years ago. These numbers really have my attention. So all real estate is local. I tell you, I probably have a little different assessment on things if I'm strictly looking at the city of Temecula as opposed to maybe Riverside County. So very, very interesting stuff. I guess we shall see. Okay, I'm going to close with interest rates. Talked about them a little bit before, but I want to share some stuff with you. So you guys probably can't see this, but I did a 6-month run, and I labeled it August 6th. August 6th is the very first market snapshot that we videoed in Adam's studio here. And I ran it through July 1. Today's July 5th, the day after the 4th of July. So there is no interest rate available. The most current interest rate publication I can get was last Friday, which was July 1st, okay? 2 things I want to share with you. Let's share the obvious. Let's just call it 3%, okay? When we started our little snapshots in August. Let's come up here to a little bit ago, above 6%, but it's trailed down, okay? Is it going to continue to trail down? I don't know, but there are a lot of people that say yes, it is going to trail down. So you need to pay attention to that. I would just suggest you do just that. Pay attention to that. I'm going to give you guys an easy way to do that as well. This QR code, click on that QR code. It'll take you to a link tree. On that link tree, I don't know what I have it called. I think I have it labeled Optimal Blue Interest Rates. If you want to get a daily snapshot on what interest rates are doing, go to the code, save the link, go down to the interest rate link, click it. It will load this page, okay? This page is always going to be the prior day. So if you're doing it on a Friday, it'll give you the interest rates for the day before. If you do it on a Monday, it'll give them to you for the Friday before, et cetera, et cetera. But you don't have to fill out any information. You don't have to give anybody your name, or are you thinking about selling? Which if you go to the internet and you start typing in interest rates, I got to tell you, it's almost impossible to get an interest rate off of the old Google machine without typing in an email or something like that because someone wants to sell something to you. So keep that code. You can go there as many times as you want. It's free. Nobody's capturing your information. You can have it, and you can stay up to speed with that. I do want to close with this particular slide today, though. This is a 50-year chart on interest rates. 1971, let's just call it 7-ish. For those of you that have relatives that said, I remember when I got an 18.5% interest rate. Well, they're talking about 1983-ish, okay? Yeah, Paul Volcker, huge interest rates, everything that went with it, inflation, the whole McGillicuddy. At any rate, the average of interest rates for the last 50 years is basically 7 3/4. Now, I've been doing this for 35 years, okay? I haven't seen, or none of us have seen, an average interest rate of that rate for about 20 years. So we have a 20-year narrative of interest rates nowhere close to 7 3/4. You draw whatever conclusion you want with that. But when you take a look at where we are, and as painful as this little spike is over here at the end, over a 50-year run, I don't know, I suppose. That doesn't make you feel better, though, if you now can't qualify to buy the house that you otherwise wanted to qualify for. But keep it in perspective, I guess is all I'm trying to say. So you've got one more chance to, I was going to say you had one more chance to snap that QR code. If you missed it, just rewind the video, grab the QR code, tons of information. So this is the deal. I'm going to close with this. Things are getting interesting, guys. I'm not predicting a crash. I don't see it. Whether we're technically in a recession today or whether we will be at the next quarter, relax. I'm not worried about a recession. But what I'm worried about is I'm worried about other people worrying about a recession. All right? But just from a pure real estate play, calm down. Let's take a look at the data. Let's not get freaked out over a 5.5%, 6% interest rate. I will be freaking out over a higher interest rate. I haven't quite decided what that rate is yet, but there is an interest rate that does break this market, completely break it. I don't think it's a 5 3/4% interest rate today. So at any rate, lots and lots of stuff to come. So have a good one. And if you have any questions, you want to reach us. Bye-bye.